Good day, my people. Today we are here again, and today we are going to look at another setup on GE. But before then, let's look at what happened yesterday. Yesterday, for the buys that we were looking for, we set our first zone to trade. Buys would be somewhere here, which he took this trade. Somewhere here, and we took that trade, and this gave us 1:3 easy, this particular trade. And then the next one, I told you that this is going to be another area for buys. No matter what, you shouldn't be looking for buys after this zone, right? Shouldn't be looking for buys after. Yep. So that's what happened yesterday. And we had 1:2 over here, 1:2.0, and then we were able to rack up 1:3 on the first try. So what do we have here? And what are we talking about today? Yesterday we talked about market structure, identifying the market structure. And I said one of the key ways to outline this was using the tool, using this to mark up like the line charts. I just like using this tool so that you guys can follow and track where I am. Right. Very simple, very easy. So like I was saying yesterday, this is the current high, and after this side, if you manage to break below this, then we start looking for sells, right? So now this is the new high. Sorry, this is the new lower low, lower high, lower low. So now what are we doing here? We are looking for places of retracement. Now that we know that we are in the downtrend, we are looking for an area of retracement. So simple, right? Right. So how do you get your areas where you would probably know that market should reverse here, market should turn over here? Right now we know that this is our lower high and this is our lower low. So no matter what, this is the safest place to keep your stop loss, just right above your lower high. And then where can we have our retracement? Now that's what we're going to look out for. So we use the FIB2. Now one major place that we can be selling again would be around this, the 61 and the 78. So this is the safest place to have your SL. Do not have your SL anywhere below the zone. And let's see if we can rack up some 1:2. if we can get 1:2. So today we'll be talking about very simple, very easy, how to avoid overtrading. So in the next 2 minutes we are going to start the series on how to avoid overtrading whilst we wait for this trade to unfold, and if there's any other pair that we can look at, we'll look at it, right? Okay, but then again, before we do this, these are the zones of interest, right? The areas of interest. We have the zone over here for a sell. We also have, I'm also interested in, let me look at the 15 minutes. In the 15 minutes time frame, I am looking somewhere around here. 1.34500. That should be your second entry. No, make your second entry 1.34525. And then your first entry should be around 1.3448. 1.3448, right? Very good. So these are the zones, the areas that we are interested in. I'm interested in this area. But then again, this is my first area of interest, right around here. Okay, so now we are going to be discussing, from here we are going to be discussing how to avoid overtrading. Let's go. In the next 2 minutes we are going to discuss how to avoid overtrading. Alright, we are back. So today we forgot to do something very important as well. We forgot to check if there's any news events. That's one of the first things I do. Alright. Today let's use Forex Factory, right? Okay, so we have ISM news at 2. Alright. Let's see how this is gonna hold up. Alright. Sometimes I have to use 2 brokers just to be sure. Because I trade different accounts, right? Okay. Alright, so let's look at overtrading. Now, overtrading is one of the biggest silent killers in this industry, right? Now, we're going to look at why people overtrade. And the first reason why people overtrade. Now, there are 2 ways you can overtrade. There can be you can have you, let's say, taking this sell over here after identifying your buyers. Let's say we just identify our buyers that we are selling, right? And then we say, okay, we are selling, but this will be one of the best places for us to sell. Me knowing very well that this will be one of the best places. After here, there's around 1.3446, right? Or 35. Let's say 1.3445. 1.3445, right? Another good area for me would be here. Anything above here, I'm not considering a sell again, right? What does this mean? So that is it for me, but this is two ways you can consider over trading, right? Now if I enter here, it would be good to, that would be the best places for me to enter. There's two trades, right? And then I'm going to manage risk considering my lot size, the volume that I enter, right? But then I know I want to sell, and this would be the best zone, because why would I be selling here? That's the premium zone. We sell in the premium zone, so that will be the where the retracements will be. But I start selling from here when price gets here, and I know very well that I cannot put my SL anywhere less than this side. Now that's over trading, and I'm going to open, let's say 30 positions until we get to my zone, my main zone, and all of them is going to put me in drawdown and having a higher stop loss, right? And I'm going to have a higher stop loss. So now what do? I have overtraded. Now another way that we can overtrade is that when we get here, let's say I have a $10,000 account. What do? I am risking 0.5% of my account size. That's around $50. And then per trade, and the whole day I am supposed to risk 1%. You get it? And so I am going to risk 0.5, 0.5. But another way you can overtrade is, let's say I'm going to open 0.5 10 times here. That's 5 lots, which is high. And then I'm going to open another 1 lot, let's say 3 times here, because by that time I'm in drawdown. And it's quite a way some people trade, but I think it's too risky. It doesn't consider a lot. Opening multiple trades here, it's not the best. For me, I don't do that. So I don't think it's the best. So why do people overtrade? These are the two ways we will classify as overtrading here today. So why do people overtrade? Now, taking trades without confirmation is number 1 on my list. You see, if you don't know where you are going to enter, or if you don't have a place where you are waiting for the market to get to it, then you execute a trade, most likely you execute everywhere. That is one of the biggest problems. You get it? That is going to be one of the biggest problems you would ever face in trading. Opening the trade everywhere, not having a place. Number 2 is entering multiple positions on the same idea. We just discussed that. Number 3 is trading every market movement. Now, for example, I know I want to sell, but then I know the market has to move up for me to be able to sell. I can't be chasing the buys. Why wouldn't I chase the buys? Because that's the part of least resistance, and I don't want to be following that. So I'll wait for the part of we trade towards the part of least resistance, which is the downside, right? Because you're in a downtrend. Now the part with the most resistance is we climbing up. You get it? So the part of least resistance is when we are coming down. So I will follow that. I would not follow the uptrend. Nope. I would not follow that. Another reason why people tend to overtrade is that when they see a good opportunity, they forget risk management. That is increasing their lot size. If you always want to increase your lot size, make sure that you can eat up the loss. You can contain the loss. You get it? Do not start something. Do not be in a trade and then now be afraid. Do not be in a trade and then be praying that, hey God, I beg you, change the direction. Oh, why I'm laughing is that I've been there before. I've been there several times. You know what I mean? I've been there several times. And most likely, I don't blame anybody. I blame myself because I have increased that. That is a trade that I cannot contain. My psychology cannot contain. And then I opened that trade. And funny enough, most of the time, the trade will go in the same direction that I speculated. But then my emotions cannot allow me hold the trade. So it's either I'll close in loss or the trade will just move back to my entry, and because I was in drawdown for a little while, I'm just going to close the trade and then the trade is just going to move. So when I increase my lot size, it means that when I increase my lot size, it should match up with my account balance. The only time I can increase my lot size is when my account balance increases. And then right now I work with percentages more than what pips, and then the money amount. Right now I deal more with the percentage. So I am risking 1%. 1% on a 10K is $100, and I know that if I can afford 10K, I can afford $100 today. And then I'm looking at 1:1, 1:2. Usually the market does more than 1:1. So 1:2, 1:3. That's what I'm looking at, right? Okay. All right. Now let's go. Another reason why most people overtrade is feeling stressed or emotionally attached to the trades. For example, when you're stressed, let's say your first trade you hit a loss, and then you just want to make that money back. If you don't take care, you're gonna trade. Oh, trading is not easy. Trading can be simple, but it's not easy psychologically, right? Now, another reason which I didn't write that I just occurred to me is fear of missing out. You fear that you are going to miss out. FOMO is one of the biggest reasons why. Fear of missing out is one of the reasons why people overtrade. But then they don't really know, because they are afraid that this move I'm going to miss. You just let me enter here. Okay, I'll enter and then see how it will go. I'll see how it will go. I'm afraid if I enter this trade right now, if I don't enter right now, this thing can turn here and go. Let's say for this same setup that we are looking at today, when price gets to the 50%, then I'll say that no. Let me do what when price gets to the 50%, let me enter my first sell. If not, this thing can reverse here and then shows me, let's see, some reversal candlestick patterns. No, per my strategy, I cannot enter around that side. Even today, I'm changing my mind. I want to enter even here. Alright, so today we are going to enter here. Okay, so we'll be entering around 500, the psychological level. Alright. Now, why is overtrading dangerous? 90% of traders blow their account within the first 90 days of trading. So 90% of traders blow 90% of their accounts within the first 90 days of trading. It's true. And what is the major cause of that? Over trading. Not that they don't even have a strategy, or not that they don't know what they are doing, but then over trading. There have been times that we have traded so well, we've made profit, and because of greed, we place that last trade where we increase the lot size. If this has ever happened to you before, then you know what I'm saying, right? Overtrading is a big disease. Okay, so why is it dangerous to overtrade? Is that it's going to blow your account? And secondly, even if you don't blow your account, depending on the broker you are on, you are going to be paying something called transaction costs. That's your commission. Some of you trade prop firms. We are in Africa, so most people are trading with Xness, and most of you are trading with standard account. So you're not really paying commission, right? Unless you are trading with the prop firms, and then some of them charge you commissions. Now, if I am to open 0.5 and then they are charging me a commission of $1, and then I open it 10 times, I've just lost how many dollars? $10 without my trade moving in or out. But if I'm to manage risk and just open one and then open another one, that's doing dollar cost averaging, right? Whilst I am in drawdown to get a better position, I am going to be charged $2. Just $2. He gets it. So that's one of the reasons why it's dangerous to overtrade, because it may lead to blowing your account. It's just there. They are just facts. It's the stats available. 90% of traders blow 90% of their capital within the first 90 days of trading, right? It exposes, now over trading, it exposes your account to unnecessary risk. That is the when I say unnecessary risk, we are at the point where you you are praying, you are wishing for direction to change, you are saying no, these people are against me, these people are manipulating the market, all these things. They are just showing that you took unnecessary risk. You took risk that you cannot afford to take. It leads to emotional decision making. Psychology plays an important role. You can have a good strategy, and just because you lost one trade, you are so emotional, and then you know that your strategy is good. The next one you're going to win, you go and then hit it hard because you took a loss. You go and then you overtrade. Now, I'm not saying that overtrading is trading only multiple times, which is overtrading, but even increasing your lot size in this case can be considered as overtrading. Now, the next one is it causes traders to abandon their strategy. Traders to abandon their strategy. Okay. Now, let's say I was following this sell, and then I said, oh no, let me sell here. This is a very good sell. This is a very good region for me to sell because the market is in a downtrend. Let me continue with the sell. Now, in my strategy, I'm supposed to sell at the top, right? And then I am selling somewhere here. Now, look at what happens. A big bullish candle, and then it takes me out. Now, what do I say? Oh, okay, since it's buying, let me just buy because I know that we are going to buy somewhere here. So you let me just buy to the 50% because they can turn anywhere around the 61%. What do you think is going to happen? I have abandoned my strategy. When I was backtesting the strategy, the only thing I was looking at was me taking the trades at the premium zone, my sell trades at the premium zones, at the best zones for retracement. You get it? So over trading, just because I picked that first trade and then I want to make that money back, led me to what? To buy here, which happens to most people. Most people. So this is one of the things. Now, some ways that you can avoid over trading. Now, trading has become much more simple in my perspective. Due to me, I think trading has become much more easier. Why is trading much more easier? As for me, I'm going to say there has been introduction of prop firms. Now, prop firms, whether you are undisciplined or disciplined, the results will show. Some people have prop firm accounts and then by 3 days, they have used up most of their drawdown, their daily drawdown, their overall drawdown. If you have like a 10% or a 12% overall drawdown, they have used up 6% in 3 days. How? So prop firms have made the trading industry or have made it simpler because it tells you clearly that you're not good. It tells you clearly, it shows you clearly. You are over trading. It tells you clearly that you are doing something wrong. It tells you that there's a problem with your risk management. Now, why am I saying this? Oh, here is one of the ways to avoid overtrading. Today we are talking about overtrading, right? Have a daily trade limit. All the professionals, I can tell you, every professional, anybody that is taking this as a profession has a daily limit, a daily trade limit for this particular business. You have a limit. Every day, I am not going to risk more than 1% of my account. That is the way we go. And that is how prop firms are also going to measure your trading, whether you're good. They are going to use these metrics to measure you as a trader to know whether you are a good trader or not. So risk management is very, very important. Having what? A daily trading limit. I'm not going to raise more than 0.5%. Now, for proper risk management, you are going to have what? No more than 1 to 2% of your trading account. Now, if I say this, having a daily trade limit, it also goes back to your account size. Now, those are opening $20 accounts, $50 accounts. My brother, my sister, my sister, please, you can't manage risk on that. Let's say you are trading gold. You are not trading GPBUSD like me. You are trading gold. You are trading US 30, Dow Jones, Nasdaq, silver. Oh my gosh. And then you have $100. Let's be very generous. Most people are putting in $100 in their accounts, right? Now with $100 on gold right now, getting a 30 pip stop loss or a 20 pip stop loss, it's not as easy as it used to be. Let me put it that way. Because now the market is extremely volatile. It's extremely volatile. So if you are even opening the lowest lot size, which your most brokers allow, is 0.01, which is what? A micro lot size. And then minimum you can get like a 50 pip stop loss. You are risking 5% of your $100 because your SL is what? $5. It's at 50 pips. If you are having 20 pips, now are you telling me that you can get a trade on gold that currently in this market condition that we are in, that is going to have 10 pips with $100 account? You cannot manage risk. Essentially, basically, you can't manage risk. You cannot manage risk. And it's quite interesting because I was talking about what? Having a daily trading limit. So your account size has to be reasonable, in quotes, for you to even execute having a daily trading limit. Because if I tell you having a daily trading limit, and then oh, it's true, and then how much do you have in your account? $100. What are you trading? Good. Please, you can't do this. Now, this is one thing that I used to do, but right now I'm not even doing myself, as a way to avoid over trading. Following a trading checklist. Now, your trading checklist should be a summary of your strategy, first of all. Now, a summary of a strategy, let's say, I don't know your strategy, but then your strategy should include what? How you get your direction. How you get a direction. So your directional bias. Now, the next thing is how you are going to enter the metrics. So you outline them, have them down by your side when you are trading, and then check all of them. So okay, my direction is telling me sell. My direction, how do I get a direction? I look at the trend. Okay, so it's a downtrend. So what do I do in a downtrend? I look for the path of least resistance. I sell. Okay, where do I sell? I look for retracements. I include fib, and then I buy or sell at the golden zones. Since a downtrend, I'm selling. So I like to sell basically on the 61%. I sell on the 61, or I buy on the 61, right? Beautiful. Now, after there, what do I do again? It's like I'm giving out my strategy. That's what I'm very quiet. I don't know how to say that. Okay, let me just give it out. So the 61 and then the 78. So when price gets there, I am looking out for what? Signs, candlestick confirmations to tell me that what we have changed, the market has moved, but the market is going to change direction. So reversal candlestick patterns. That's all. So I just write this thing down. What did I see? Okay, I saw a hammer. I saw an engulfing candle. I saw a tweezer bottom. I saw this. I saw that. Whatever it is, whatever your metric is. Some people even do something which is way more risky, right? Just right here, when the market gets there, just like that, and then they are in the trade. Just like that. All right. So a trading checklist is very important. It's essential. Before entering a trade, confirm that all your conditions are met. Even if one condition is missing, stay out. Accept this fear of missing out. Accept that you miss opportunities. You miss opportunities. You miss opportunities. That is part of it. You cannot take every opportunity. Before, I used to trade gold a lot, and I used to trade GBPUSD, right? I used to trade GBPUSD as well a lot, but then I realized that the win rate on GBPUSD was way more than on gold. I win on gold. It was actually more than 50%, but on GBPUSD it was way more higher. And since I am very comfortable, if you've traded gold before and you are trading GBPUSD, you would know that GBPUSD is very slow, very slow, very slow as compared to gold. Gold moves fast. It's a fast market. It's nice. It's like a fast car, like a Ferrari, Lamborghini, right? Very fast, very volatile. If it's consolidating and raging too, it's gonna range. Like it's gonna show you that I can range. I am okay missing trades out on gold. I am very much okay missing. I'm not even checking what's going on gold unless someone wants me to check. If you want me to check, just drop it in the chat. Right. So I am okay missing out all those trades. Now, the market will always provide another setup, day in, day out, day in, day out. Every section, I have my sections here. I have my sections here. Day in, day out, the market provides a new setup for each and every section, each and every session, right? Each and every trading session. So the next thing is that set a daily loss limit. It's just like the first one. Now, the first one that we discussed is that we were saying that have a daily trading limit. So in a day, I'm going to take 2 trades. I'm going to take 2 trades at most because I'm trading London and New York session. So if I lose in the London session, that's all. I don't go. I close my laptop, wait for New York session. I check what news item is available. As usual, Forex Factory or Financial Juice. I just come here, I check. Okay, US ISM services PMI actual was 54.5, forecast was 53, so it was just around the normal rate. But having a daily loss limit is quite the same, but it's a percentage or a monetary figure. You get it? So in a day, I have a 10K account. I'm not going to lose more than 1%, $100. That's it. That is it. Once you reach your predetermined loss limit, stop trading for that day. That's all. Focus. Now the last one and then the most important one that we are going to talk about today. Is That is it for. But then let me tell you the last one. Focus on quality, not quantity. Now try to get the best trades, the best trades of the day, the best of the best trades. Now, if you are having a good strategy, your strategy should have outlined the kind of setups that you pick. Now, for me, if the price gets here, let's say in the zone, and then I don't see a reversal candlestick pattern, for me to enter this cells, and then it gets into the zone, and then I just enter straight, I execute sell. That is what I call a risk entry trade. But then if I see a candlestick confirmation whereby market reverses over there, let's say an engulfing candlestick over there, what do? I know that now it's confirmed. That is what I call a confirmed entry. So that's an A setup for me. Some people call it an A setup. Some people call, and the first one, the risk entry that I described, is what I call a B setup. So I even have a C setup. You get it? So I know the kind of trades that I want to enter. Let's say I want to enter A setups just this week. That is what we call equality. Not that when I see a C setup trade, I enter. When I see a B setup trade, I enter. And when I see an A setup trade, I enter. No, I am maintaining myself towards just A setups. You get it? So we should focus on what? Quality trades and not quantity trades. So trades with a lot of opportunities, or trying to get every opportunity on the market. No. One high quality setup can be more profitable than 10 average setups. Because, for example, if I am risking 1% on this trade, right, the actual zone where I'm supposed to take this trade is here. And then because of my broker and then how sometimes they misbehave, I put my trade entry somewhere here. Right. Right, that's what I do for most of the time. But if I am to have my trade set up here, as usual, which is supposed to be here, on the 78, around the 78, I am making 1:3. Just like that. So if I risk $100 on this, I am making $300. And you'll be surprised that before I'll make this $300, someone has blown their account and has entered over 10 trades trying to like make more money, and then they've blown their accounts. Yesterday we had 2 setups. I couldn't take one. I couldn't take this 1:3, but I took the next one over here. This is 1:2. Just like I was saying, if not for my broker that misbehaves, I would have taken that trade, this trade over here. I would have taken it here. But no, because of my broker, where did I put it? I put it here. And I made 1:2. During the live, I was in a trade somewhere here. I entered this trade. And then what happened? This took me out at entry, because my entry was here, just right on top of this rectangle. So this thing over here is market was building liquidity, this up and down, this sideways range. This market just building up liquidity. So I am going to be comfortable waiting for this quality setup, and then I hit it hard, rather than what? Rather than me taking every opportunity that I see. You get it? So this is it. This is what we've learned today. Over trading can be dangerous. So we've learned that over trading is not just trading every setup, every trade opportunity, just because you're afraid of missing out. But then even increasing your lot size can be considered as what? Over trading. And why people overtrade? Fear of missing out. 1. Taking trades without waiting for confirmations. 2. Entering multiple positions on the same idea. 3. Trading every market movement. Increasing lot size after a loss to recover quickly. We talked about that. Feeling stressed or emotionally attached to trades. It's one of the reasons why people overtrade. And then we said that overtrading is dangerous because what? Of the transaction cost, the commissions, the swap that would be going to the broker. It can be avoided. It exposes your account to unnecessary risk. That's another reason why overtrading is dangerous. It leads to emotional decision making. When you are there, you'll be praying, God, please turn this. I wish this thing will go down. If this thing goes down, if this thing goes back to my entry, I'll close, and then it will go in profit, and then that will be what we'll be facing. And another reason why overtrading is dangerous is that it causes traders to abandon their strategy. Because you hit a loss the first time, you're just trying to recover. Now, I know that this thing will go up before I'm supposed to sell, but then it has to go up for me to sell. Let me just place a buy so that no strategy, nothing that is in your strategy supports that, and just place a buy, and then that can be very dangerous. Here are some ways to avoid overtrading. Having a daily trading limit. Do not trade more than 2 times. I take 2 trades in a day. 1 in the London session. If I lose, I'm out. I close my laptop. New York session, I come in again. And then number 2 is following a trading checklist. Everything I've just said, a checklist is just like a summary of your trading strategy. So everything that you need to look out for, you write it down, and then you make sure that you check it before you trade. If one condition is not even met, please stay out of that trade. Accepting that you miss opportunity. Fear of missing out is true, it's real, and then it will happen to you. Accept it. Set a daily loss limit. Now, just because you trade 2 times, you should know that there should be a monetary figure. 2 times shouldn't be this first time I'm going to risk 2%, I'm going to risk $200. The second time I'm going to risk $500 on that account. No, it should be a set limit. It should have a trading loss limit. If I lose 1% of my account, so that 1% of my account, I'm going to have trade limits of 2 trades. That's so $50 on a 10k account, making $100, which is just 1%. Sometimes you can't even risk $50 because you'll be paying commissions, right? Focus. And then the last one, and then which I say is the most important one that we discussed, is what? Focus on quality setups, not quantity, right? And now we said 1 high trading setup can be more profitable than 10 average trading setups. And everything that I've stated here is my own experience and things that has happened to me, and I just decided to share this today because probably we'll not even get this trade set up today, and then it's gonna happen tomorrow morning. It's part of it, right? Okay, so now just wait here while I wait time. If you've enjoyed this session, please consider subscribing, consider joining this family for today, and like the live. Thank you very much. So let's just watch this whilst I read. If there's any comments, if there's no comments, we'll be ending here. It's 2:38. We'll be ending around 2:45. Enjoy cool classical piano music whilst you wait.